Welcome to our weekly roundup of key economic and business developments in Sri Lanka. I'm Nishani Pigera, and here are this week's top stories. President begins India visit. Sri Lankan economy to recover faster than expected in the second half of the year, says the central bank. EU proposes GSP Plus extension. Import restrictions to be lifted by September. In our main story this week, President Wickremesinghe is in India on a two-day visit. This is the president's first trip to India since taking office last year. He is stated to hold talks with the Indian Prime Minister Narendra Modi. According to Ali Sabri, Minister of Foreign Affairs, energy, power and port projects are likely to be discussed. Ministers Ali Sabri, Kanchana Wijesekara, Douglas Devananda and Chief of President's Staff Sagala Ratnayaka are slated to accompany the president. According to Dr. Nandalal Veerasinghe, Governor of the Central Bank, the Sri Lankan economy is expected to recover faster than expected in the second half of the year. Easing of borrowing costs, disinflation and a steady flow of foreign exchange are enabling the recovery. The central bank had previously forecasted the country to contract by 2% in 2023, as growth in the second half of the year is set to offset much of the contraction of the first half, which included a 11.5% decline during the January to March period. The European Union is proposing extending the current GSP Plus scheme awarded to Sri Lanka by another 4 years. Set to expire on the 31st of December this year, the European Union in Sri Lanka announced that it recognizes the importance of the scheme for Sri Lankan exporters. Nearly 3 billion euros of goods are exported to the region each year, making it the second largest trading bloc for the country after the United States. It added that arrangements for the new scheme are ongoing and that for Sri Lanka, the extension proposal means it will continue to have the same access to the European Union and have the same obligation to comply with the 27 international conventions. Import restrictions placed in March 2020 are to be lifted by September this year. However, car imports will still not be permitted. According to State Finance Minister Ranjit Siambalapitiya, 526 billion rupees were saved due to the import restrictions, and now only 930 commodities are restricted. In July, the central bank also recommended the relaxation of import controls of 900 items except for motor vehicles. On Wednesday, a bill was ordered to be published by President Ranil Wickremesinghe to increase the debt ceiling to almost 14 trillion. The staggering 9 trillion rupees increase is to finance the state's debt service payments, recurring expenses and welfare expenses. Loss of access to international capital markets due to debt default has meant Sri Lanka is compelled to raise funds domestically. During the first 16 days of July, 70,034 tourists arrived in the country. This pushed the year-to-date visitor numbers to over 694,000, an increase of 52% from a year earlier. Arrivals to date are now less than 20,000 from last year's full figure. This week's arrivals increased the monthly daily arrivals to 4,377. In July, India accounted for 17% of the arrivals, followed by the United Kingdom and China. Sri Lanka Tourism has placed a target of just under 137,000 visitors for July. Now let's take a look at the weekly movement of the All-Share Price Index and the S&P SL 20 Index at the Colombo Stock Exchange. At the Treasury bill auction held on Wednesday, yields on all maturities continue to expand for the second consecutive week. Bids amounting to 220 billion were received, of which 63 billion rupees were accepted. The Sri Lankan rupee continued to depreciate against the dollar this week, with the central bank's indicative mid-spot rate ranging between 319 and 324. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.